I'm similar to the Thriller in Manila. Honeys call me bigger, the condom filler. Whether it's stiff tongue or stiff dick, Biggie squeeze it to make shit fit. Now check this shit, I got the pack of Rough Riders in the back of the Pathfinder. You know the epilogue by James Todd Smith. I get swift with the lyrical gift. Hit you with the dick, make your kidney shift. Here we go, but I'm not domino. I got the funk flow to make your drawers drop slow. So recognize the dick size in these Coincatch jeans. I wear 13s, know what I mean? I fuck around and hit you with the Hennessy dick. Mess around and go blind, don't get to see shit. The next batter, here to shatter your blatter, it doesn't matter. Skinny or fat or light skinned or black, baby, I drop these. Beneath with my me, screaming, I poppy. I love it when they call me Big Pop, but I only smoke blunts if they roll prop. But look, I got ya caught up with the drunk flow. Fuck taekwondo, I told a fofo. For niggas getting mad cause they bitch chose me. A big black motherfucker with G. You see, all I do is separate the game from the truth. Big bang boots from the Bronx to Bolivia. Getting physical like Olivia Newt. Tricks up my click dick all day with no trivia. So give me a hoe, a bankroll and a bag of weed. I'm guaranteed to fuck until I nosebleed. Even if the new man's a certified Mac, you get that H-Town in ya. You want that old thing back?
B-I-double-T-I-E with some new R-U-L-E. Notorious, known for bustin' in your E-Y-E. Baby, baby, bitches know they love to hate me. How come you come, we're coming back, so maybe. How close we came to coming together is crazy. How come you and your sis facing me the faces? When y'all coming, y'all be crying like I'm killing y'all bitches. I know there's a bigger picture than the camera rolling. Cause I don't think y'all be knowing how this shit's unfolding. Back shots to the rear, got the Mac unloading. Gotta reload like every so often. Saying I got my swagger back, I'm looking like bitch. My swagger never left. Don't be so hard pressed to be impressed by these new rappers. They actors and the fact is, you want that old thing back.
Like Scarface and Bushwick, Willie D, having nightmares of girls killing me. She mad because what we had didn't last. I'm glad because her cousin let me hit the ass. Fuck the past, let's dwell on the 500 SL, the E and J and ginger ale. The way my pockets swell to the rim with Benjamins. Another hund's in the crib, please send it in. I fuck non-stop, lick my lips a lot. Used to lick the clips a lot, but licking clips have to stop. Cause y'all don't know how to act when the tongue go down below. Peep the funk flow, really go. I got the cleanest, meanest penis. You never seen this, stroke of genius. So take off your Tim boots and your bodysuit. I mean the spandex, and hit my man next. Sex get rougher when they come to the nut buster. Pussy crusher, black nasty motherfucker. I don't chase them, I replace them. And if I'm caressing them, I'm undressing them. Fuck what you heard, who's the best in New York? Fulfilling fantasies without that nigga Mr. Raw. Or tattoo, I got you wrapped around my dick. And when I'm done, I got the split shit.
What's up, everybody? Happy Monday. Happy to see you all here. I have a couple of announcements before we get started. So the trading bot, it's on Bitkit. We just got Bybit approved as well. So we'll have that ready on Bybit. Obviously, the goal is to have this on Coincatch and Blowfin so our American traders can use it. So hopefully that'll be ready soon. I know Blowfin should be ready by early to mid-October. Coincatch could be late October. Hopefully no delays. Again, they're adding one-way and smart copy to make it easier on you guys, as we saw that was an issue when we first launched. Second announcement. So I have someone here. We all know that. Let me take a step back real quick. So a lot of you have actually messaged me on Twitter, Discord. I've seen mentions of it. And you've mentioned taxes. Like, how can I do my taxes? Do any of the exchanges offer tax programs or any way to easily do taxes? And today I have someone. He's a head CPA of Count on Sheep. His name's Justin, so he's going to talk to us about making our taxes easier and possibly saving us some serious money. So more on that in about 10 to 15 minutes, so stay tuned. He's going to be on. He has a whole presentation he's going to give. Guys, I know, I usually go over market analysis, and I know taxes aren't fun. No one likes to talk about them, but they are important, and doing them right will not only keep you out of jail, but possibly give you some leeway and possibly end up making you more money in the end. So more on that soon. Not a huge crowd today. Kind of shocked because the market's been moving. Tau and Fetch, two of the coins I've been posting about on Twitter for the last several weeks, several months even, up tremendously. We'll definitely get to that. But first, I want to go over the SPX. Guys, this is going to be quick. Not a lot has changed. I do have a slight worry with the SPX, but again, I don't think there's a ton of concern, right? We have potential bearish divergences if this weekly closes red, but again, that could end in the form of just upwards consolidation to breaking out or continuing upwards. Again, I don't see anything that suggests bearishness or trend flipping. Everything looks very strong. Bitcoin finally starting to respond, and obviously a lot of movement from last week's news on the rate reduction, right? I was kind of surprised. I didn't think a 50 basis point reduction would be as bullish, but clearly we're seeing the market react. So again, lots of fundamental news coming through. We've got a presidential election, probably more rate reductions coming. We'll see how they impact. But for now, all the technical analysis I have is very bullish, right? Very bullish. We've been saying this for months and months, almost a year, right? Bullish continuation, consolidation, continuation, consolidation, continuation. We've been saying. Now we're seeing that starting to carry into crypto. We will run this thing up. I hope so. What's up, Lord? So moving on, DXY. Guys, I don't really see any issues here. And for those of you that are new, the dollar going down means everything else goes up, right? Yes, we're sitting in a support level, but I think we're forming a bear flag. You open up the daily, we're just consolidating. We're resolving oversold tendencies, moving sideways. It looks like a nice bear flag. Yes, we could possibly bounce slightly higher, but considering the fact of how strong stocks look, and especially Bitcoin, if it can break 65K, I have my doubts that the dollar bounces here. I still have pretty good confidence. Again, no reversal signs that this will eventually trend lower and break down through this 100 level, right? The 100 level is held for, what is this, almost a year, right? January of 2023 was the bottom, so almost a year, about like 10 months, 9 months? Yeah, about 9 months. What was this, the end of January? So actually closer to 10 months. Yeah, end of January, beginning of February. Accumulate intel, like the stock? Anything AI related, let me know. But moving on, Tether dominance. Actually, I did want to talk about this. So I did want to talk about total, and I talked about this with patrons this morning. Right, I have my private analysis every morning with them. And, as much as everything moved last week, and as much as, you look at Tau, right? Tau did a 200% move over the last 3 weeks. Absolute amazing, right? And you look at that, and you look at Fetch, which is now starting to run, right? Fetch is starting to have its move. and Ethereum's starting to bounce, and ICP's starting to move. And guys, that's all great and everything. You know, I'm not going to ever negate that. But there are some underlying issues we still have to solve. Total 1, 2, and 3 are still in a sideways downtrend. We have not created a higher high. What we need to do this week or next week is get above, obviously Bitcoin still holding the reins of this market, needs to get above $65,000, close above 65K, and really put in a higher high to change the direction of trend. We've been sideways and down. If you put a higher high in, we are now starting a new uptrend. So although everything is very exciting, it hasn't happened yet, so stay vigilant. We could still, and I know we're at resistance, right? You have to think objectively here. We are still at resistance. We could very easily come down to the middle of this kind of range, or even possibly all the way back down to support. So stay vigilant. I know it's exciting. I know some of these AI coins are pumping, but don't let that distract you from the fact that we have not created a higher high yet. We are still not in a bullish uptrend. I mean, macro-wise, yes, we're in an uptrend. It's been going up for almost 2 years. But on the contrary, we have not changed the intra 6-month trend where we've been moving sideways and down, right? You got to be realistic here. And even with total 3 still, and ignore the diagonal lines. We all know that I don't trust diagonal lines, but looking at our trend, we still have not put in a higher high. We need to put in a higher high if we want to see not only that change in trend, but just change in the environment in and of itself. We've seen these 10 to 20% moves, especially from Bitcoin within this range. What's going to separate this one is if it puts in a higher high and changes the dynamic of this trend. Looking at tether dominance, again, Confluence, right? Confluence is king. We talk about Confluence all the time. Guys, we still haven't changed anything. And I know, trust me, I'm like you. I want it to change. I've got long-term investments that I'd love to see do extravagant gains, right? Especially Bitcoin and Ethereum, but nothing has changed. So, you know, I talk about not being emotional with your trading, being objective, looking at what the chart is giving you. The chart has not changed. So again, I keep saying vigilant. Stay vigilant, because there is a chance, if you didn't catch that news-based pump, and just real quick, I'll skip ahead to Bitcoin, there is a chance that we come all the way back down to 58, 57K. I don't doubt that, right? If we get a head and shoulders here on this 4-hour, which unfortunately it looks like we're trying to make, especially if we do this exact pattern I have here, that's a head and shoulders, right? You break that neckline, bam, you're talking 58, possibly 57, even 56K. So stay vigilant, stay honest with yourself in the chart, right? The unfortunate thing is I really don't have a read on kind of short-term direction at the moment, because last week was a news-based pump. Unfortunately, did not catch it, did not get an entry point. We are seeing signs of consolidation, just as long as it doesn't turn into a distributive move. Again, talk about it in a minute on Bitcoin. African dude, 58K would be very surprising with this strength. Well, the problem is we actually don't have strength yet. Yes, the AI coins are moving like Tau, Fetch, ICP. But you go to Bitcoin and this is not strength. We have been ranging in the same range since August, right? We have not broken and created a higher. If we create a higher high, close above this area, then yes, I would agree we have some strength. We have something we can discuss in terms of a bullish uptrend. But for now, we've been doing the same thing for the last almost 3 months now, right? And we've even rejected it completely today. So much supply at 64.7, 65.5. That's why I'm saying this is a huge area for us to break. Absolutely. Tau's ripping, I know. I love it. I absolutely love it. Tau ripping is making my week. I think my position's up like, oh, it's up a lot. I won't share it. I'll share it when I sell it. But it's up a lot. It has literally almost tripled in value over the last 3 weeks just because of the large move. And you guys know I bought a lot between the $100 and $200 range. But yeah, AZ, nothing has changed. I mean, we want it to change, but we have to accept the fact that nothing has changed yet. So, all right, let's take a look at the 4 hour. For now, guys, last night, not necessarily for now, last night, I made this tweet just so you guys wouldn't get caught in a fake out. I know that this market loves to fake everybody out, loves to take advantage of people getting emotional, right? And we actually were forming bearish divergences here with lower volume. All of this indicating that this move here would be a fake out. We would not get that official breakout of 65K resistance, which we did not. We immediately rejected. We've been slowly moving down. Now, the good news is, as we're slowly moving down, and actually I'll leave this here. As we're slowly moving down, volume is also coming down. So there is a good chance, right, that this is acting as consolidation to break out. But on the contrary, you have a left shoulder, a head, and if we come back up, now you have a right shoulder, right? And that's not to say you couldn't short and make money off that, but we want the direction of this macro trend to change. Now, how would this head and shoulders not work out if we start putting green candles in and start moving like this? That would offset the right shoulder formation. That would immediately erase all of the potential of that move, that head and shoulders move. So hopefully that's what happens. I see that this 4 hour is green so far, where it's almost 5:30, so we still got plenty of time. Need to consolidate lower before we move higher. In my opinion, I think this is a healthy movement. Yeah, I would agree. We're also consolidating, bringing in volatility. You open up the 12 hour and the daily. These volatility bands need to move closer together if we're going to break this macro resistance. Bollinger Bands are a great indication, again, for finding fake outs. You need volatility to break your not only resistance, but strong support levels as well. And you open up the daily, look at the gap between our bands. We do not have the volatility to break through this macro point at the moment. Now, a couple days, get this band all the way up, 4 or 5 days. Now we're starting to build some volatility. Now the lower time frames are building volatility, and hopefully the lower time frames will give us something to work with in terms of a trade setup. So real quick, I'm going to go over Bitcoin dominance and Tau. We're going to skip Ethereum today. I'll go over Tau, and then I'm going to have my man Justin go over all of the crypto tax information. Guys, again, I know taxes aren't fun. They're often boring, but it's important. Not only does it get you on the right side of the law, but it also will save you a ton of money if you do it correctly. Yeah, we'll look at Bitcoin dominance. I'm going to open up now. So Bitcoin dominance, my only somewhat issue, which isn't necessarily an issue, I think it's going to consolidate and go higher. I mean, that could change, right? You open up the daily, and it does look like we're making another head and shoulders if we get something like this. And actually, let's redraw this. So we are looking at a potential I don't know why I said inverted. We are looking at a head and shoulders if we do something like this, right? And break through that neckline. Now, again, that would create a third divergence there. That would be very beneficial for alts. However, that would be very, very bad for this bull run. Very, very bad. That means we're towards the end. And I hate to say that, but that would mean that the gains from Bitcoin, nothing else is coming. Ethereum likely will not move very much. And a lot of these altcoins aren't going to move very much in general. Right? I mean, a lot of people want to see all-time highs broken, 5, 10, 20 X's from some of these alts. If this head and shoulders plays out, you can kiss all that goodbye. There's not enough liquidity to flow into this altcoin market to see the crazy gains that we all want to see. OXO, Pyth doing great. 2 AI platforms doing absolutely fantastic. Tau keeps moving. Tau is an awesome coin, man. We called it out almost a year ago in November. Could that not also possibly strike an alt season? Yes, it could. But the problem is there's not enough liquidity in this market for a major alt season. Like, you'd see some alt movement, like maybe Tau would continue moving in the AI coins, but you're not going to see the alt season we've seen in the past. We need to see Bitcoin dominance consolidate and continue higher to see that liquidity go into Bitcoin, right? More money pour in, more people get interested as Bitcoin breaks 65, 70, 80, 90, 100K. And then maybe we see that transfer from Bitcoin dominance, where Bitcoin's starting to lose dominance, seeing that money flow into altcoins, that changes the game. Even if Bitcoin dominance drops, it most likely puts in a higher low. That's the hope. Hopefully we don't get this head and shoulders. So I'm going to move on. I'm trying to keep today short, guys. We got a not necessarily a long presentation coming, but a very important one, and I want to give that most of the time today, most of the attention. So Tau, guys, on the daily looks great. I in June, July, I posted several times at the lows, $200, great entry, right? We talked about weekly RSI. Weekly RSI is at the lowest point it's ever been for Tau. Those are great entry points. If you took advantage of them, excellent. If not, again, I went on Twitter and said, or X, and in Discord, and I said, hey, eyeball this, what is this, 370 level? As soon as we break it, it's off to the races. Since breaking it, now again, I'm not necessarily trading Tau. I hold it long term. I'm looking to sell anywhere between 2 and 10K, and I know that sounds absurd, but it depends on how much liquidity goes into the alt market. But if you traded this, you could have made an easy 60% just from today and the last couple of days beforehand. Now, I don't see any problems with this. Unfortunately, if we create another high, we will most likely get a bearish divergence. So if we get to $600, I know you guys are going to be like, this is awesome. This is the best. I'm going to buy it. It's going to keep going. Don't. It's too late. It is far too late to buy this. Do not buy this when you've seen a monstrosity of green candles. We're forming likely a bearish divergence on the next high. Right? I would expect this to create another high, big pullback consolidation to continue. Right? At least probably 3 to 4 weeks of consolidation to fix this overbought daily. I mean, look what happened in the past. And I guess you could argue we could technically go up on the daily. The daily doesn't have divergences, yes. But you're still going to spend several days correcting. And those corrections could be upwards of 20 to 30%. I mean, some of these here were 25%. So, all right, guys. That's what I wanted to cover today for the analysis. I know it was quick. Just a little quick announcement before we move on to the next thing. I am going to be out of town from tomorrow until Friday, so we won't have any live streams this week. I do apologize. I will be posting on Twitter and in Discord if there are any changes, of course. But without further ado, I wanted to introduce Justin. He's the head CPA at Count on Sheep. They're a crypto tax preparation firm. He's going to give you guys some information on if you'd like to use their service or services, how you can save money and do it correctly. But without further ado, I'm going to turn over to him and let me get him going. Justin, you're on, my man.
Awesome. Thank you so much, Roman. Thanks for having me on. So as Roman said, I'm Justin. I'm the head CPA at Count on Sheep here. We do crypto tax preparation and planning for individuals, and then we also do digital asset accounting for businesses. I have a quick slide deck here that I kind of want to just talk about, what are the main problems we see in crypto tax? Where are taxpayers losing a lot of money, and what strategy could we be applying in order to, optimize tax savings? I'll try to go quick. I know this is not the most exciting topic here, but this is super important when it comes to saving money. So me, head CPA here. I'm actually a former auditor at Ernst & Young. Audited multi-$100 billion companies. I'm licensed in California, and now I'm specializing in crypto. Quick disclaimer, the information in here is based on the US, but a lot of major nations have similar taxation policies. So I'm hoping if you live in a different country, you can take what you learn here and then narrow your research for your own country. We do service, most major nations. So if you still want help, we can help you with that. Guidance around crypto tax is pretty limited, so just be careful about that. And then of course, always consult your own professional. So what's the big problem with crypto tax? Obviously, it is way different than traditional finance. Stocks and bonds, you purchase them on brokerages generally, like Fidelity. and you will only really sell them on that brokerage. So it's very rare that you are, transferring stocks from Fidelity to Vanguard. And when you are doing that, generally those brokerages are talking to each other, and they are, transferring the associated information. But with crypto, the thing that we love the most is that you don't have that type of limitation. You have the freedom to transfer from one exchange to the other, go from one wallet to the other, interact on DeFi. It's quite beneficial, and that's what we love about crypto. But it does introduce some nuances in how it's going to be taxed and how we should account for it. And I'll get into some of that in a bit. As you all know, how to calculate your taxes, it should be pretty straightforward. Your proceeds minus your cost basis is going to be your capital gain or loss. Your proceeds is generally cash, but if you are swapping one crypto for another, it's going to be the fair value of the crypto you're receiving. So if you swap Bitcoin for ETH, that's actually a taxable event, and the fair value of what you're receiving is going to be considered your proceeds. And then your cost basis is going to be the purchase price plus any associated costs like transaction fees will actually be baked into that. So this is something we see a lot of clients not doing and neglecting. And this is like literally the easiest thing you can do to reduce your taxes, is just make sure that you're baking in transaction fees into your cost basis. And so this is a very, very simple example. Obviously the prices of Bitcoin are totally different. This is just for simplicity, but imagine you purchase Bitcoin for $30,000, you sell it for $35,000. When you purchased it, you had $200 in transaction fees. And then when you sold it, you had $250 in transaction fees. Your cost basis would be that initial $30,000 that you paid for it. And then that $200 and $250 in transaction fees should be added to your cost basis. So you have $30,450 in cost basis in total. So therefore, your gain at the end is not going to be that $5,000 differential. It's actually going to be only $4,550. And so that's because you baked in those transaction fees into your cost basis. So again, this is like literally one of the easiest things you can do to start reducing your taxes without any professional help. Just make sure you are baking in your transaction fees into your cost basis. And then, by the way, I don't know if Roman mentioned, but if anyone has questions, we're going to do a Q&A at the end, or just feel free to type them in the chat right now, and Roman will just, stop me and ask those questions. So happy to answer any of your questions. If I get stumped, I'll make sure to follow up so you have a direct answer after the call.
Thank you for that.
Yeah. So the problem, what's the biggest problem with crypto tax? I was mentioning how it's very multifaceted. It's way different than, stocks. The primary problem is that cost basis is not transferred from one exchange to the other. It's not like Coinbase is talking to Kraken, or your Coinbase is sending your cost basis to your MetaMask wallet. So they don't know what your cost basis is when assets are transferred in. So don't take it from us. Take it straight from Coinbase themselves. They basically said, hey, our gain and loss calculator won't be correct. Our tax forms won't be correct if you've done any of the following: bought or sold digital assets on another exchange. Instantly, 90% of people are wiped out. 2, sent or received digital assets from a non-Coinbase wallet. Same thing. Sent or received digital assets from another exchange, including Coinbase Pro. So they're not even talking to each other. I know Coinbase Pro isn't around anymore, but when Coinbase Pro was around, they didn't even figure out how to communicate the cost basis with each other. And then lastly, number 4 here, store digital assets on an external storage device. So we should all be using, hard wallets. We should all be using, we should not be storing our assets on exchanges. We know this from FTX. We know this from Celsius. You should have your crypto and your assets. If it's not your keys, it's not your crypto. So long story short, your cost basis is not being transferred from one exchange to the other. And I'm going to show you with an example here how you're absolutely getting shafted by that. When you're taking the 1099s from Coinbase, from Kraken, handing them to your CPA, or just plugging them into TurboTax, you're getting absolutely shafted on the taxes. And here's why. So I'm a CPA, I'm a numbers guy. I want to just go through an example with you and show you what the difference is. So imagine you bought ETH for $1,000 on June 30th, 2022, and then you transferred it once it was worth $2,000 like 6 months later. So Coinbase is going to show a gain of $1,000 in 2022 because they don't know that you transferred it to one of your other wallets or exchanges. They just see that it left your account, And so they're going to be like, all right, we don't know where this went, so we're just going to say this is the disposal. So right there, they're saying you have a $1,000 capital gain. Then Gemini gets it on 12/31/2022. They say, hey, we don't know where this came from. We have to abide by, U.S. regulation. We certainly can't be helping you underreport your assets. So because we don't know the cost basis on this asset, we are going to assign a $0 cost basis. This is legitimately what they are doing. So when assets are coming into Coinbase, Kraken, Gemini, any centralized exchange, they legitimately have to assign a $0 cost basis because they have no idea what you purchased it for. And so, then again, 6 months later, you transfer it to Kraken when it was worth $3,000. So Gemini says, okay, you sent it out. We don't know where it went. It's a disposal. It was worth $3,000, and the cost basis we assigned it was $0. So now you have another $3,000 gain in 2023. And then lastly, on Kraken, same situation. They don't know where it came from. They're going to assign a $0 cost basis. And then when you sell that ETH for $3,500, they're going to have a $3,500 capital gain. So looking at the right here, what happened? What did the exchanges show on their 1099s? In 2022, you had a short-term gain of $1,000. 2023, you had a short-term gain of $3,000. And then 2024, you had a $3,500 short-term gain, resulted in overall about $2,775 in tax. Now, what happened in reality was you just transferred it from one exchange to the other and then finally sold it, a few years later. So in reality, in 2024, you should just have that $2,500 gain, and it should be a long-term gain at long-term rates. So the net differential here is that in this example, you're literally paying 5.5 times more tax if you're just relying on the 1099s and not doing the reconciliation. And then on top of that, we know time value of money. You are paying tax before it's actually due. So not only are you paying more tax, you are paying tax before it's due. Literally, tax strategy 101, defer tax as much as possible, accelerate losses as much as possible. It's the easiest, strategy you can use. If there's no other tax strategy you apply, that's the one you should be using. Defer paying taxes, defer gains, accelerate losses.
That is something I actually had no idea about. That was super interesting. I always thought all of these exchanges, now granted, when you're transferring, they don't know, but I figured they just took it as it was and they didn't really mark that on their books. I thought they were just marking your trading. That is interesting.
They used to, or they kind of used to, but what happens is that if they are like, let's say they put in like, oh, hey, you got this, and at the time it was worth $2,000, so they assigned a $2,000 fair value, cost basis. They could be basically assisting you in underreporting the IRS, and so obviously that puts them in hot water. So the only thing they can do is say, all right, we don't know where it came from, we don't know your cost basis, so you're going to have a $0 cost basis. So maybe back in 2021, 2017. That's what was happening. But these days, we're getting clients that are coming to us saying, dude, the IRS just sent me a letter saying I owe hundreds of thousands of dollars. I know I didn't make that type of money. I know I probably lost money. How could this be? What gives? And it's because of this. The IRS is getting those 1099s. And they're like, well, Coinbase says that you had a $50,000 gain here because you just sold a Bitcoin. But in reality, it has a $0 cost.
You could have bought it at 60, transferred it, sold it at 50, transferred it back, and you have a $10,000 loss, but they think you made 50 grand. That's crazy.
Exactly, and it's actually nuts. And what we're seeing with the IRS is that it's guilty until proven innocent. It's totally backwards. So they're basically, if you're not getting ahead of it, if you're not being proactive and reporting what it actually should be, they're just going to be like, well, you didn't report anything, so we're just going to take what Coinbase says, and now you have to prove us wrong. And it's, of course, costly and all that. So, guilty until proven innocent, terrible, but this is what's happening. This is why so many people are getting shafted in crypto. There's like this extra nuance of being able to transfer everything across the blockchain. Super helpful. It's why we love crypto, but it creates a little bit more complexity when it comes to the taxes.
Gotcha. Thank you for sharing that.
Yeah. So some of you, very few of you, will be like, oh, well, I only use one exchange. I only use Coinbase. I don't go onto the blockchain. I'm just, just on Coinbase. I should be fine. My taxes are, optimized and accurate. It's not true. So you actually have a few different cost basis accounting methods available to you. And so what that is, first in, first out, let's say, which means if you bought a Bitcoin today, a Bitcoin, 2 weeks from now, and then, a month later you sold a Bitcoin, the question is, which one did I sell? Did I sell the first one or the second one? It's not an obvious answer because it depends on your cost basis accounting method. So if you're someone who's been collecting bags since 2017 or earlier, and you just kind of buy and hold, FIFO, the first in, first out method, is really, really bad and costly for you because you are basically selling your earliest bags first, the ones that you got for maybe 20 grand or 15 grand, for Bitcoin, instead of the later bags you got, like maybe you bought at 70K. And so you're reporting large gains instead of, potentially losses, as reporting, a different method. So Coinbase and all the other exchanges, their default is FIFO. So first in, first out. And I've almost never seen a situation or a client where FIFO was the right choice for them. The only scenario I can think of is when we had like college students who weren't making a lot of money. And so they knew they would be graduating, they were going to start making money next year. So we actually wanted to maximize their gains in that year. And then, therefore they could get rid of or offload those low cost basis holdings in the year that they were going to be taxed very little. And then, moving forward, they could hold on to those higher cost basis bags. But yeah, 9 times out of 10 or 99 times out of 100, FIFO is pretty bad. And I'll show you why with another example here. So obviously these numbers are just for example purposes. Bitcoin is not priced at here currently, but just to keep it simple, we use some low numbers here. So on the left, look at the scenario. Say you bought a Bitcoin for $8,000 on January 15th, 2023. Another Bitcoin for $15,000 on March 15th, 2023. So 2 months later. And then a third Bitcoin for $12,000 on June 15th, 2023. This is not uncommon. We know crypto is very, very, volatile. You can, especially if you're dollar cost averaging, you're definitely buying at multiple points. And then, a year later, you sell one of those 3 Bitcoin for $18,000 on April 15th, 2024. So using the different methods available to you. So let's just look at FIFO versus LIFO. What is going to be my gain? So under FIFO, you're selling that first bag first. $8,000 is your cost basis. Your proceeds is $18,000. Your gain is $10,000, but it is long-term. So you have a $10,000 long-term gain. Whereas if you used LIFO, last in, first out, your cost basis would be that last Bitcoin. So the one you bought for $12,000, and your proceeds would stay the same at $18,000. So you have a $6,000 gain, but it's short-term. So this is a great example of how it's not one size fits all. On one hand, yes, you have a smaller gain with LIFO, but it's going to be taxed at short-term rates as opposed to long-term rates. So this is where, it gets a little bit, you need to do some analysis. You need to work with your professional to figure out, okay, what actually is best for me here. But these aren't the only 2 methods available to you. The one that we use here at Count on Cheap is called Specific ID. And this thing is actually insane. It is so helpful and so powerful when you use it correctly. And I'll show you why here. So Specific ID allows you to essentially cherry pick exactly which bag you're selling from. So I'm sitting here, I'm looking at this account, and I see obviously that middle one that we bought for $15,000. That is the highest cost basis, but then I'm checking the dates and I see that it actually is still in the long-term period, or it's timed out of that short-term period and now it's long-term. So I would want to pick that one to sell so that my cost basis would be $15,000. My proceeds stay at $18,000. My gain is $3,000, but it's also long-term. So now looking at the comparison at the bottom, FIFO, $10,000 long, LIFO, $6,000 short, Specific ID, $3,000 long. So it's the lowest gain and the best preferential, holding period.
So this is less taxes you pay. And just real quick, for those of you that live in other countries, in the U.S., we have short-term capital gains and long-term capital gains. Long-term capital gains have a maximum tax rate of 20%, whereas short-term can go all the way up to, is it 40? Close to 40%? 37. Yeah. So you're almost double the tax rate short versus long. So just bear that in mind.
Yeah, and most major nations have a very similar type of structure. I think in Germany, I don't know if any Germans are listening, but in Germany, if you have long-term capital gains, it's actually 0% tax, which is insane. So if you're in Germany, hold your bags until they're long-term. You won't pay any tax on them. So there are a few requirements. I'm not going to bore you to death here. But in order to use specific ID, you need to diligently track a lot of these details. So, you know, the date and time each unit was acquired, the cost basis and the fair market value of each unit when it was acquired and sold. And then, whenever those assets were disposed of. So there are requirements here. Usually if you're working with us or if you're using a software, you will meet all of these. It's just to make sure that you have like the critical data in order to, be able to apply specific ID. So there are softwares out there and they advertise themselves as DIY crypto tax softwares. I kind of laugh when I see that because like you can just go on any subreddit for any of the DIY softwares and you'll just see people like, how do I do this? This isn't making sense. It's saying I owe a lot of money. It's basically like taking a puzzle box and dumping all the pieces on the table and then saying like, all right, it's complete. It's totally not. It needs to be stitched back together. It needs to be, put together, ensured it's complete and accurate. And then on top of that, optimized, right? You don't want it to just be complete and accurate. You want it to be optimized. You want someone to go through and make sure that, you're doing that correct cherry picking. You are selecting the right bags to be sold and whatnot. So there are, the pros to these DIY softwares, which is like getting your wallets and exchanges in one place. That's by far one of the best things you can do. The blockchain is very, like, me personally, I have a lot of wallets. I have a lot of exchanges. And so I get a little like, it's kind of confusing to know where all my assets are at. But when I have a software that I can kind of aggregate the data and pull it all in, then it's way easier to visualize, to see where I'm at, to see what my account's worth, my total portfolio in crypto. So it's very good for aggregating your data. And then of course it's good for, just literally populating the tax forms and then giving you that dashboard to see, okay, my portfolio is up today or it's down. It pulls in that data live if you use the API functions there. But what it's bad at is the wallet matching. So just like I was saying, you need to, if you transfer from Coinbase to Kraken to Gemini, you need to make sure that it's being tagged as a transfer instead of a separate deposit and a separate withdrawal, because otherwise it's going to view that as a taxable event, when in reality a transfer is not taxable. So it's pretty bad at wallet matching. It usually can get some of it correct, but then a lot of times it doesn't get it correct. So you have to do some manual reconciliation. As soon as the data gets even slightly complex, like if you're trading in DeFi, good luck you doing this on your own. As soon as the data gets slightly complex, it goes out the window. It obviously doesn't do cost basis modeling. So that's the specific ID that I was talking about. And then it also doesn't do tax loss harvesting. So, you need to be able to look at, okay, what am I currently holding? What's underwater? Could I sell?
Guys, I will be right back. Keep listening to Justin. It's raining outside. One of the dogs is outside. One moment.
Which, by the way, the wash loss rule does not apply to crypto. Crypto is currently classified as property. The wash loss rule is a security. It only applies to securities. So, just a heads up, the wash loss rule is not necessarily applicable. With that said, the IRS does have a magic wand. So if they determine that you did something specifically to avoid tax, they might disallow it. So what I always recommend to people is when you are looking at your current holdings and looking at tax loss harvesting opportunities, sell out of the positions that are down, if you want, and then sit back for a second and reassess which assets you do want to be exposed to. So you're making a new independent decision. You've sold out of the losers, and now you're sitting back. Do I want to be exposed to Ethereum? Do I want to be exposed to XRP? Whatever. And then from there, you can decide whether or not you want to buy certain assets. So that's what it's bad at. And honestly, this is where all the money is saved. So the cost basis modeling, the tax loss harvesting, the wallet matching, that's where all the money is saved. You don't want to be paying tax when you don't have to. So you want to make sure that it's, correctly picking up on transfers. I'm not sure how many of you are in DeFi, but like I was saying, if you are trading in DeFi, these softwares are pretty terrible. You still have to use them. Like we use them for our clients, but we just go through and reconcile it. So you have that human touch essentially. And so when there's smart contracts involved, these DIY softwares completely fall apart. So there's a lot of, potential taxable events that are included in a smart contract that these DIY softwares don't necessarily know how to pick up on. They can incorrectly treat certain things as taxable when they shouldn't be. And then inversely, they can, incorrectly treat things as non-taxable when they should be. And so if you want to make sure your account is complete and accurate, and then of course optimized, if you're dealing with smart contracts, the DIY software you definitely need to review your data. And then similarly, liquidity pools, yield farming, I mean, that kind of goes hand in hand with smart contracts. Like 95% of the time, whenever a client is dealing with a liquidity pool, the transactions are not being correctly accounted for. And so like almost always it's resulting in like massive overstatement of gains. It's very, very, few and far between where the software will actually reduce your gains, like artificially reduce your gains. Almost always it artificially inflates your gains. So it's very important to review your data if you're using liquidity pools or yield farming. And then lastly, off ramping to centralized exchanges and ultimately back into fiat. So like, I don't know if you guys are keeping up with Coinbase or what's going on there, but basically Coinbase has like in 2024 has started freezing people's funds like crazy, like for 6 to 12 months. And so this is really due to anti-money laundering rules and requirements, like they're forced to. So essentially if they basically say like, hey, your crypto is a little bit suspicious, we think it could be, dirty crypto essentially, they're going to freeze it and launch an investigation until they determine whether or not it's clean. And so the best way to combat this, the best way to get ahead of this is to have a reconciled portfolio, to have a full paper trail of where you got the crypto, what you paid for it, and all of that. So in order to avoid, off-ramp problems and off-ramp freezes, you need to make sure you have the proper paper trail, show that you paid the correct tax, you're not laundering the money essentially. So, these are problems that we're seeing pop up more and more in centralized exchanges. Of course, if you're only on chain and you only plan on staying on chain forever, I guess this one doesn't apply, but most people are when they profit big, they ultimately want to take some of those profits and use them, in fiat and whatnot. So for the majority of people, this is a serious concern. And then NFTs, I know the NFT craze is long over here, but if you traded NFTs in 2021, when things were going crazy, these are blatantly a pain in the ass. So establishing fair value for NFTs is very, very difficult. I mean, of course, if you're bought an NFT for an Ethereum, let's say, that's easy to establish the fair value because we know what Ethereum's worth, therefore we know what the NFT is worth. But when you're swapping NFTs for other NFTs, who's to say what they're worth? We had a client who had 15,000 transactions in 2021, and it was just trading NFTs. I swear, this guy was trading them like baseball cards. He had Bored Apes, CryptoPunks, and essentially he traded. There was one specific transaction that was a nightmare for me. He traded a CryptoPunk and a Bored Ape for like 13 different other random smaller NFTs. And so what we had to do was try to determine the fair value of each of those other NFTs and then fractionalize his cost basis of the two he traded and reassign them to those other 13. So complete pain in the ass. So if you're swapping NFTs or if you have swapped NFTs, you really have to be careful and intentional about how you're treating it and make sure that you aren't either over reporting or under reporting. The goal here is to do it correctly, but obviously pay the least amount of tax. So that's where we come in. And then minting NFTs. So one problem that we see is when people mint NFTs, they don't capitalize that cost into the cost basis. So they will pay, maybe 0.005 ETH to mint an NFT, and then they'll get that NFT and it'll have a $0 cost basis. So what you can do is you can actually take the expense you paid for it, that fee in Ethereum, and then use that and capitalize it into the cost basis of that NFT to, reduce your gain by a little bit. It's not much, but it is something. And of course, this is part of the strategy. You want to find every tax saving, strategy as best you can and apply it. So, we just make sure that you're capitalizing those minting fees into that NFT. So what does our process look like? Pretty much we have step number one, which is this is the only part that you're really involved in, and that's getting you organized on the platform. So we'll get all of your exchanges and all of your wallets into one place. Usually we use Coinly. We're partnered with them. I just wrote a blog about Celsius for them just last week. And so you can sync your exchanges and your wallet addresses to Coinly, and it'll pull in that data automatically. This is when you'll get the dashboard and all of that. Super helpful, super easy. This is the only like somewhat painful part for you, but once you do it once, it's like so much easier to stay on top of it and make sure that you continually keep it updated. So, this is the one part that you're involved, the rest is us. The next part is the digital asset reconciliation. So that is us putting the puzzle pieces back together. So now that we've dumped the puzzle box onto the table, you can step back and relax. We'll get going to work. We'll stitch it together. We'll make sure all the wallets are matching, and all those transfers are being tagged as transfers, not deposits and withdrawals. And then we'll actually identify missing wallets for you. So this is something that a lot of people, especially if you've been a long-term trader, people will forget about wallets that might even still have funds on them. So one of our clients was, he had started collecting Bitcoin in 2011, and he had bought like hundreds of Bitcoin for like less than $10. It was actually insane. It was the craziest thing I've seen. Unfortunately, he was like losing Bitcoin like throughout all of the years, like throughout the decade, pretty much, through various exchanges that were going under and just him being an idiot. But yeah, his Bitcoin holdings were like slowly dwindling as it got more and more valuable. But he, we were doing his account. He had over 95 wallets, which is obviously an absurd amount. And so, yeah, it's an absurd amount. But he had over 95 wallets, and we, like through our reconciliation, we had identified a wallet that he was interacting with. And when we looked at the block explorer, we saw that there was assets still on it. And we were like, we think this is your wallet. We've seen you interact with it. There's assets still on it. We just want to let you know that, like, there's about 100K of Bitcoin still on this wallet. And so he was like, holy shit, I think that's on an old iPhone I have buried in my garage. So he tore up his garage, found that iPhone, plugged it in, charged it. And sure enough, he had a wallet on it, and that 100K of Bitcoin was still on it. And so he was able to recover that. So, through our reconciliation, we will identify any missing wallets you might have forgotten about. Obviously, this is a bit more applicable to like long-term traders. If you're, pretty new, you probably haven't forgotten about wallets, but, just wanted to call that out there. And then step 3. So once we do the reconciliation, once we put the puzzle back together, this is when we will start looking for, cost saving strategies. We'll start maximizing your savings. So the cost basis modeling, that specific ID we talked about, we'll make sure that we are playing around with different models. What works best for you? What minimizes your taxable gain or maximizes your loss if you have one? And then we'll also look at tax loss harvesting opportunities. So again, we'll look at your current holdings, what's underwater. We'll identify, hey, if you sell 1.7 ETH, you'll capture $5,000 in loss, or whatever it would be. And so we'll call all that out for you. We're not going to tell you like do this, do that. We just want you to make the most informed decisions. So we'll just give you all that information that you might not have, and then that way you can make the most informed decision. And kind of on top of that, so this is more reserved for our high net worth clients, but we do have a tool where if you plug in all of your data, like if we can, once we do the reconciliation, we can download all of your data, all of your tax lots that you're currently holding, and then we can plug it into this tool that I developed. And you can say, I want to pull out 100K from my crypto. Which assets should I sell in order to have the least tax impact? And so it'll just run through your crypto and be like, okay, sell 0.47 Bitcoin, sell like 12 ETH, sell this much XRP, whatever. And it'll just go down the list of what you should sell. And then, if you don't want to include Bitcoin, for example, I never want to sell my Bitcoin. Cool. We can just exclude that, and then it'll just rerun the report and then tell you exactly what to sell. So super powerful tool. Again, it's generally reserved for more of the high net worth clients. One person, wanted to build a $200,000 pool in their backyard and like remodel their patio and all that. So, and he wanted to, use his crypto holdings to do that. So we basically told him how to do it, and he was able to do it with only a $5,000 capital gain, which was huge. So very little taxable impact from him. He knew exactly which tokens to sell, and then, was able to do that without, any big tax impact. And then lastly, this is, the part that is everyone obviously wants. You want your IRS compliant tax forms. They'll be audit ready. They'll be filled out and ready to file. So this is a keep your CPA service. So if you have a CPA that you already work with, we're not trying to take you away from them. We just know the reality is they probably don't know jack shit about crypto. And so that's where we come in. And then of course, if you use TurboTax, let's say, you can just you just upload it directly into TurboTax, and it'll take the reports that are generated. And then we do an executive summary as well. So what that is basically like going all the way back to your first trade, essentially all the years that you started. We'll give you all of your reports, and then it'll summarize, here's what you made in this year, here's what you lost in this year, so on and so forth. It'll also go over some of our recommendations, our advice for you, and then any specific findings we had in your account, any problematic areas or anything like that. And then, as I mentioned, so we do actually serve, most major nations. We have clients in most major nations. This is not a comprehensive list, but just kind of wanted to call out some of the places that we have clients in, namely Canada, Australia, the UK. Those are really our bigger clients, with the US obviously being our main source. But, if you're in a different country other than the US, we can still help you if you want. But yeah, so that's it for me. Happy to answer any questions if you guys have them. Feel free to, put them in the chat, and Roman will, ask them to me, and then I can answer.
So yeah, guys, if you have any questions, let me know. I'll run this for another 10 to 15 minutes, depending on questions that come in real quick. So a lot of you know that I've been accumulating a lot of stuff: Bitcoin, Ethereum, Tau, Fetch. Tau just did a 200% move, right? If I wanted to, that program you have is amazing. I did not know you could do that either, where you can literally pick and choose what you want to sell, because you can do that in real estate. I don't remember the form. I'm not an accountant, but I think it's a 10. Do you know the form for it in real estate, where you can you basically set off everything you've expensed, and you can counteract that in a later year. Right? Like you can offset, I don't know the term for it. We do it all the time, and I always forget the term. But I did not know you could do something similar in crypto, where you can pick and choose which assets and the timing you want to sell to make them line up for long-term capital gains. That's pretty incredible.
Yeah, I mean, the caveat is, like, if you sold 100% of everything, obviously you would recognize that gain. Like, this strategy really only defers those gains. So, like, our CEO has Bitcoin that he bought at $200. And so he has like 40 Bitcoin, and that he bought for $200. And so he is never trying to sell those. And so whenever he's selling Bitcoin, we're making sure that we're pulling from the top of his holdings, Bitcoin that he bought for 70K, let's say, instead of those early bags, because, as soon as he sells those, he's going to be hit with a huge taxable event. And we don't want to cross that bridge until we absolutely have to. And so, yeah, exactly. We want to just make sure that we're strategizing as best we can. Deferring gains as long as we can, accelerating losses as best we can. It's tax strategy 101.
Yeah. So real quick also, I will be putting a link in the stream chat moving forward. There's also some information in Discord if you guys want to get a hold of Justin and use his firm. Again, I was kind of stemming this off, but a lot of you guys know I bought a lot of spot. A lot of you guys bought a lot of spot. By the end of the bull run, your $10,000, $20,000, $50,000 worth of spot could be worth millions of dollars. It could be worth even more, depending on how much money you save in taxes. Look, I know taxes aren't fun. They're boring. They suck. No one likes paying taxes. But if you can use a service that's reliable, trustworthy, they have the validation, verification for it, they have the rapport, I would go with them. I would use them, especially if you're, after the bull run, you make a bunch of money. Because I know that in 2020 and 2021, post bull run, I actually had a friend that made $5 million from holding spot positions and ended up paying an egregious amount in taxes he probably could have avoided if he used a service like this. So, again, if you guys are interested, in Discord, there's a full, I think I have it under like crypto tax info. Yeah, crypto tax info. Check that out. But real quick, we do have a question. So...
Yeah, and just really quick before we do that question, I just want to say we have free consultations for everyone coming through Roman through that Discord. So if you guys want to just book a free consultation, you don't need to work with us. You just want to ask your questions like personally. You'll be talking to me directly. So it's a free 20 minutes. Thanks to Roman here. Thanks for having us on. But yeah, feel free to book a consultation.
So someone said, I track my buys and sells on an Excel document. My CPA said that I can provide him my cherry-picked bag transactions via Excel. Is an Excel doc a valid proof of earnings to the IRS? Very helpful. Thanks.
Yeah. So, I mean, obviously all the transactions are on chain. And so you would have to be able to point to whatever's on chain. And if you have it in Excel, I mean, that's crazy that your CPA is using that. I mean, that's like archaic essentially when you have softwares available.
Man, that's some dinosaur shit for real.
Yeah,
we have
I mean,
AI technology that can do crazy things, and not saying what you're doing is wrong, but there are better ways. But to each their own.
Yeah, and I mean, like that is valid. And if you have like all of the the history to support how you've cherry picked, and you have all the blockchain transactions to support that, yeah, there's nothing wrong with that, and that works. But I can't imagine that it's super accurate. I'm trying to think about how I would do it in Excel, and it's pretty hard to imagine how like the best way to actually ensure you're pulling the correct tax lots and all that. But if you have a system that works for you, that's good for you, and hopefully you can keep working with that.
We have another question. How do you claim losses from trading on a derivative non-KYC exchange? For example, I bought spot using Coinbase, sold for a profit, then turned that cash into USDC, sent it to Blofin, and lost my money.
Gotcha. Yeah. So here's the biggest misconception is that the 1099, you're not taxed on your 1099 from Coinbase. You're taxed on what you report. And so if you're on DeFi, obviously you're not getting a 1099, but you still need to report that. So all you need to do is just report that loss on your 8949 and your Schedule D, and that's how you will essentially recognize that loss. And so in order to do that, you need to know your cost basis. You need to know the date you acquired that asset that you eventually lost, the date you sold it, the proceeds, which would be zero. For derivatives, though, it is a little bit different. That's, it's not a capital gain. It's going to be, recognized just as a loss. But, essentially, long story short, you report what you lose. It's not just your 1099. You're not taxed on your 1099. You're taxed on what you report.
Excellent. I believe that's all I have for now. Let me see if there's anything else. And if any of you guys are on Twitter, go to YouTube and ask the questions. The Twitter comment system or chat system is broken. I don't know what's wrong with it. I'll give it another couple minutes. If I don't see anything, then we'll call it there.
There's one thing I want to add about the DeFi. So, I just said you're not taxed on the 1099. You're taxed on what you report. That doesn't mean that the IRS doesn't see what's happening on DeFi. They do. So I talked to Seth Wilkes. He's the executive director of digital assets at the IRS back at Consensus a couple months ago. And he told me basically that they're building, or maybe even have built, he wasn't very clear to me, an AI tool that can essentially like map out your digital footprint or your blockchain footprint. And basically it's like if you're on a centralized exchange like Coinbase, like you just said, and then you send it out on chain, now they know that wallet address is associated to you. And then this AI tool, anywhere you interact from there, any as we branch out on DeFi, this AI tool will have assign a probability of likelihood that wallet belongs to you. And so, now they're mapping out who you are on the blockchain. They know what you're doing. And so if they see that you're not reporting the activity on DeFi, now they have ammunition to come against you. And so, his subliminal message to me was they are looking to extract from the crypto space what they have failed to extract for the past decade. So you definitely don't want to be trying to hide that stuff. The only way you could potentially get away with it is if you've never interacted with a centralized exchange. Like if someone sent you crypto on chain and then you've just solely kept it on chain and none of those wallets have interacted with any wallet attached to a centralized exchange, that might be the only way you could get away with it for now. But of course, I would never recommend that. You want to stay above board. And again, if you're ever going to off ramp that, you're going to run into issues. So just make sure you're staying above board essentially.
Excellent. I don't really see any more questions here. So Justin, thank you again so much for the presentation. I think not only did we learn a lot, I learned a couple of things I did not know, and I'm sure a lot of people here did. But you're giving an option, especially during what, my analysis says we're going to start a bull run. So this is a good opportunity for you guys to get your taxes done right, possibly save some money. Justin's a great guy. He's easy to work with, easy to talk to. I put his full contact in Discord. We'll also put it on Twitter and in the live stream chat. So if you guys want to contact him, you'll have a method too.
Awesome. Thank you so much, Roman. Appreciate your time.
Yeah. See ya. Take it easy.
Bye.
All right, guys. I am going to end it there. Just real quick. Taxes suck. I wanted to take today and really talk about them. I talk all the time about exit strategies and when you should sell, but we never talk about what are you going to do for taxes. And I hate to break this to everybody, but if you're someone that put in like 10, 20, 50 grand into crypto in 2022, 2023 when the market was down. So let's just do a quick zoom out, right? Or even TAO. Let's say you bought $10,000 of TAO, a couple $1,000, even a couple $1,000 for the TAO, like $100. You're not going to escape taxes, right? You're not going to be able to deposit 100 grand into your account without triggering some red flags, not only from your bank, but from the IRS. So again, I know that there are a lot of you that escape taxes. I know that because I was one of those people, but now I can't, right? I'm not trading with a couple $100 anymore. I'm trading with hundreds of thousands of dollars. And I know some of you aren't quite there yet, but even if you're trading with tens of thousands of dollars, guys, don't run the risk of avoiding the IRS because look, pigs get fat and hogs get slaughtered, and you don't want to spend jail time for not doing something that is relatively simple and stress-free as shown by Justin. So real quick, I know today was long. I know very informative. I hope it was. Everything I try to bring you guys, I'm not trying to give you some half-baked product or half-baked analysis per se. All the exchanges I work with, all of the individuals that come to me, guys, I have dozens of people in my DMs offering me this deal and this product and this company and this. Look, I read it all. I do my due diligence. I'm not going to give you guys something I don't trust and isn't verified. Not only by my own research, but in and of itself, right? Justin's a CPA. He's worked for valid companies. They have all the licenses and registration. They do everything the right way. So, just giving final thoughts. But again, guys, I'm not going to be here for the rest of this week. I'm going to be out of town. So unfortunately, no more live streams. I know, I'm sorry. But with all that said, guys, always remember to be patient. Use risk management.